Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what businesses are really doing. Today we're diving into a proxy statement from West Bancorporation, a company you might not know, but whose actions affect real people and the economy. This isn't just boring paperwork, we're going to look at big decisions, executive pay, and what it all means. Think of it as corporate gossip, but with consequences. So what's this proxy statement about? Basically, it's West Bancorporation telling its shareholders about the important decisions they need to vote on at their annual meeting in April. It's like a school election, but with potentially billions of dollars on the line. First up, the shareholders get to vote on who sits on the board of directors. These are the people who oversee the company's strategy and performance. Think of them as the school board for the bank. Are they doing a good job? Are they representing shareholder interests? That's what the vote's about. 10 directors are up for election this year, but we're saying goodbye to two long-term directors, Stephen Schuler, who is facing the age limit for service, and Philip Wirth, who has decided to not stand for re-election. They are also bringing in John Sorensen, retired leader of the Iowa Bankers Association, so he's definitely going to have some opinions. It's also important to know who's considered independent on the board. Basically, this means they don't have any major ties to the company that could cloud their judgment. All nominees are considered independent, except David Nelson, the CEO, and Douglas Gulling, the former CFO and previous employee of Westbank. Next, shareholders get to weigh in on how much the top executives are paid, or as it is often known, the say-on-pay proposal. This is a non-binding vote, meaning the board doesn't have to listen to shareholders, but it's definitely a temperature check on how happy investors are with management. Finally, shareholders vote to ratify the appointment of the company's independent auditor, RSM US LLP. The auditors check the bank's books to make sure everything's on the level. Think of it as making sure the school district isn't cooking the books. It is important that they are independent. Now let's get to the important thing. Who are the people in charge and what are they good at? It's pretty important to have a group of people who are diverse and whose backgrounds are helpful and important. You need folks good at banking and financials, but also other things to keep the business secure. West Bancorporation highlights a few of their key governance practices. It's kind of like the company's report card. They highlight the fact that the chairman and CEO roles are separate and their chair is independent. That's often seen as a good thing, providing more oversight. They are sure to also note they have an age limit for their directors. I guess they want to see some fresh blood. Having a separate chair and CEO might sound normal, but it's not always the case. The company believes it's in the best interests of stockholders. They believe the CEO should be focused on running the business, and the chair should be focused on leading the board. The board delegates responsibilities through committees. The four main committees include the Audit Committee, which keeps an eye on finances and accounting. The Compensation Committee decides how much executives get paid. There's also the Nominating and Corporate Governance Committee, which finds and suggests potential directors. And finally, the Risk Management and Information Technology Committee, which identifies all the risks and technology challenges. The Risk Committee is important, especially for a bank, because it has to consider the risks that come with those incentives. You don't want the executives to just chase short-term profits. They have to manage risk responsibly. One of the more interesting disclosures is the CEO pay ratio. This compares the CEO's pay to the median employee's pay. For West Bancorporation, the CEO makes about 16.7 times the median employee. While you can draw your own conclusions about how good or bad that is, the SEC mandates the public to disclose this information so investors have a better idea of the internal distribution of compensation. Let's get into West Bancorporation's performance. They are a bank providing loans, deposits, and trust services. They emphasize customer service and community involvement. They emphasize business banking, so they are trying to work with businesses. Looking at the financial highlights, the net income was around $24 million. Diluted earnings per share was $1.42. The company pays $1 in dividend per share. Return on average equity was roughly 10%. The important takeaway is that net income was roughly the same as the previous year, but the return on equity fell a little. The company emphasizes that credit quality remains pristine. They had no loans greater than 30 days past due and only one classified loan. If their credit quality is still good despite all the rate hikes, they must be doing something right. For the year, the Compensation Committee has decided not to change the base salary or cash bonus of the CEO. They have also awarded the CEO more stock. The goal of the bonus system is to incentivize financial goals relative to their peer performance. This also applies to the named executive officers, not just the CEO. Finally, the shareholders are asked to vote in favor of the 2024 executive compensation. They are also asked to vote for RSM as their accounting firm. If the shareholders vote no, the board doesn't have to listen. Transparency and dialogue are important. West Bancorporation encourages open communication among stockholders, directors, and management. They've set up a way for stockholders to communicate with the board, ensuring that concerns and suggestions can be heard. Now, stepping back and looking at the whole picture, what's my take on West Bancorporation? The good, their pristine credit quality is impressive, and the emphasis on relationship building over reckless growth seems to be working for them. Long-term vision, focus on relationships, community ties. The bad, like everyone else in the banking industry, they experienced some margin challenges in 2024. It is important to monitor how they are balancing rate hikes while maintaining profits, high interest rates, and competition from other banks. Overall, West Bancorporation seems to be a steady ship in a turbulent sea. While some financial metrics dip slightly, their focus on risk management and community engagement provides a solid foundation. However, they need to watch out for interest rates, make sure they keep their good relationships with their business customers, and make sure their board continues to provide good oversight. Thanks for watching. If you found this corporate deep dive helpful, please hit that like button, leave a comment with your thoughts, and subscribe for more corporate decoder videos. Until next time.